welcome on to Searching for Mana, Mike.
Thank you for having me.
Pleasure. Fuller introduction, Michael Brown, who is a senior market analyst with Caxton FX. Been with Caxton for 4 years.
Yep, 4 years in August.
How would you sum up elevator pitch Caxton services?
So we are, short and sweet, an international payments provider for both small and medium businesses and private individuals who either need foreign currency on a card when they were going overseas on holiday, or if they need it deposited in their bank account to pay business expenses, invoices, fund overseas property, that kind of thing. We service clients both in the UK and overseas, and we're based in the Gherkin in the City of London.
Fantastic. I was at...
There's the sales pitch out of the way.
Thank God. I was at a breakfast where Mike was giving a talk in January.
Yeah, when things were normal.
I don't know if the last couple of years have been normal at any point, but certainly slightly more normal pre-COVID, nonetheless. And I was certainly struck by how Mike managed to eloquently explain macro financial trends in a relatable way to things such as what happens if Trump stays in power? What goes on if Brexit is to be a hard Brexit? So I thought that this would be a good opportunity for the audience to hear some of Mike's views on obviously the evolving landscape right now that we have in the economy. So I'm going to fire straight into that. With Brexit, you've said that you foresee a so-called skinny free trade bill being struck. What could that look like?
Well, that's a little bit against consensus. I should probably mention that first, because Brexit has obviously come firing back into the news over the last couple of weeks or so. And the street is now almost moving towards there being no deal and there being a hard Brexit at the end of the year. I think that there is the political will there to get a deal done. I think it's actually needed, to be honest with you, by both sides, because we've just had the biggest economic shock in anyone's lifetime in terms of COVID. We can't have another one as a WTO Brexit. A skinny free trade deal is one where we get some tariffs will be imposed on certain goods. We get limited access to the single market, but I think most importantly, there will be something done on the most contentious areas at the moment, which are fisheries and the level playing field. And I think also, crucially for the city, some sort of financial services access will be agreed as well. And I think this will come probably towards the mid or end of October.
What obstacles currently stand in the way of that happening?
Well, the biggest problem at the moment is you've got negotiating mandates that are completely incompatible with each other. So you've got the EU wanting a more comprehensive agreement and level playing field, the UK wanting what they're calling a Canada-style deal. Quite frankly, you could put the two negotiators in a room forever and they will not come up with an agreement because the mandates just do not work. So the biggest obstacle is getting political leaders to meet up, as we had last year where Boris met Leo Varadkar, the Irish Taoiseach, and we got a deal done there. We need a rerun of that, and that will clear the way to the tunnel negotiations and to getting something over the line, I think.
With the internal markets bill, how will markets react if the bill is either A, passed or B, scrapped?
Well, the internal market bill is a negotiating tactic, I think. I don't think it's anything more than that. And actually, if you look at the timings of it, it's not going to finish its stages in the Commons until the 15th of October, which is when the next EU Council summit is, at which I expect some kind of a breakthrough in the Brexit talks. And then it's not going to finish its stages in the Lords and be passed into law until December. So it's going to be right at the deadline when we leave the EU in any case. I think if it is passed in its current form, that pretty much the chances of a trade deal are over. But I don't think it will be passed in its current form. I think it is a negotiating tactic by the government to try and inject a bit of realism into the talks and say to the EU, if there is no deal, this is what it looks like. Here it is in black and white. Let's get this sorted. And I think there will be a deal sorted, and then the internal market bill is changed and goes onto the statute books later in the year.
How likely is it that the Bank of England will put interest rates below zero?
Well, if you asked me that this time yesterday, I would have said it's not going to happen. Given what they said yesterday and the fact that they're doing quite a lot of work to look into the operational considerations of it and how they'd implement it and what the impact will be on UK banks, I think it's certainly a higher likelihood than it was, but I still think it's a relatively slim possibility.
And it being slim, therefore, what do you suspect the bank will put in as contingency measures, therefore?
The BoE will do more QE. They will buy more bonds in November, probably £100 billion worth. They may tweak the term funding scheme as well, so give easier credit to banks. But I think barring a WTO Brexit, that I don't see the appetite being there for the BoE to go negative. But the problem is, now they're doing all this work, everyone is sat there asking themselves, why would you do all of this work for something that you're never going to put into place? It seems like a lot of hassle to go through for something that you might just keep in the toolbox for a rainy day. So now there's just that nagging doubt in everyone's mind going, is this something you're really going to do next year? And I think we need to hear from the bank to say, this is what we're going to do, or this isn't what we're going to do. We just need some clarity on it. But I think it's a relatively slim chance.
What do you think would be the better outcome?
Never to do it. Negative rates don't work. I'm a very, very strong opponent of it. If you look at Europe, if you look at Japan, it doesn't work. It doesn't stimulate demand. It hurts your banking sector, and it actually harms the economy rather than helping it. So I think the last thing the UK economy needs, having just gone through COVID, potentially going through a bit of a rough patch with Brexit, rising unemployment, is then for your banks to be penalised by being charged negative rates. It's just the worst idea you could have.
Part of the economy is looking strong in terms of the consumption is back to pre-COVID levels. How much will this impact the pound going forward?
I don't think it will have much impact at all. Sterling is now a political currency once again. So I think the fundamentals of the UK economy are actually relatively similar to other G10 currencies. So I don't think that's going to have much of an impact. But it's interesting you say that, because what we've seen with coronavirus is where the actual recession itself has been split from the pain of a recession. So normally you have a recession, the economy contracts, unemployment rises, disposable incomes fall, etc., etc., etc. What's happened this time is because we've had such a humongous fiscal intervention, so we've had the furlough scheme, we've had the Eat Out to Help Out scheme, other such measures as that you've had the recession, the economic recession in Q1 and Q2. The economy is not technically in recession anymore, we're growing again. But people will feel the pain of the recession in Q4 when furlough expires, when fiscal policy is tightened again and the government tries to balance the books. So it's very, very different to anything we've seen before. So consumption has recovered to where we were pre-COVID, but I think there's pretty significant risk that we see that fall again into the end of the year.
And Mike, on that point, we're seeing a lot of signs that there could be a second wave. This, of course, features into the predictions of what Q4 might look for the pound. How do you see that?
Well, the problem with a second wave is how do you control it? Because with the first wave, it was very much, this is unknown. There was almost a national spirit to everyone play their part and get this under control. The problem with the second wave is I think everyone is, quite frankly, sick and tired with the restrictions that we're living with. And I'm not sure whether people want to put up with more restrictions to try and control the spike. But nonetheless, if we do get a resurgence, and unfortunately it looks like we are getting one at the minute, if you look at the numbers, that is going to hit consumer confidence. People are going to, whether there's restrictions or not, people will be more reluctant to go out on the whole. It's going to hit business confidence as well, and that is going to hit the pound.
What did you think of Eat Out to Help Out? Do you think it should have been extended through September?
I think Eat Out to Help Out was a success, but I think there are a few caveats to that. Because one, it looks as if you look at the data, diner numbers were up significantly, 60, 70% year on year, Monday, Tuesday, Wednesday, but they were actually lower year on year on a Thursday, Friday, Saturday and Sunday. So I do wonder how much of it was just demand being shifted from the back end of the week to the front end of the week. And I also think, actually speaking to restaurant owners, a lot of the Eat Out to Help Out, because people are going out earlier in the week, they're not buying as much alcohol, and that therefore hits restaurants' profits. So I don't think it should have been extended, but I think it was a very, very good scheme, because for something that was relatively cheap, it got the hospitality sector moving again, and importantly, it gave people the confidence to go out and get involved with the economy once more.
Can you recommend any other schemes to stimulate hospitality and other affected sectors?
Well, I think the biggest one for the hospitality sector and a couple of other sectors as well, travel in particular, is a targeted extension of the furlough scheme. Because I think it's important that when we go through a crisis, we do need to reset our labour market, and some jobs do not come back after a recession. But we need to reset to the new normal whenever that comes, not to the economy mid-pandemic when businesses are still being closed due to public health guidelines. So I think if businesses are being closed as a result or not able to operate at capacity, as a lot of restaurants are at the moment, I think an extension of the furlough scheme would really, really help them break even.
Where would you invest in currency-wise at the moment, therefore?
Currency-wise, I think I'm looking for two things. I'm looking for a relatively decent control of the coronavirus, and I'm looking for governments with a lot of fiscal firepower left. So if you look at that on the whole, that's really a pretty poor mix for the UK, unfortunately. It's a decent mix for places like New Zealand and Australia. And it's also a pretty poor mix for the US, where another fiscal bill is just deadlocked and probably won't be done before the election. So a lot of room to spend more if necessary, and a high degree of control over the pandemic are the two sort of ingredients that equal currency strength at the minute for me.
Housing prices rose recently in June. Do you expect this to be a W-shaped recovery?
In house prices, I think it will be. I think house prices are being propped up at the moment by, one, a release of a humongous amount of pent-up demand because people couldn't move anywhere during lockdown. Two, the stamp duty cut by Rishi Sunak, which I think was a mistake because it's just going to inflate the bubble even further. And three, people making perhaps slightly rash judgments saying, I'm going to work from home forever, I need a bigger house out in the countryside rather than my tiny London flat. So I think what you're going to see is come probably the turn of the year, house prices are going to begin to roll over again. But we know that a lot of UK investments are in houses. So the authorities will do whatever they can, I think, to try and keep house prices elevated to a certain degree. So I think there is going to be a dip come the turn of the year, but I think it's going to be quite a limited one in terms of time.
So at Caxton, with all of that in mind at the moment, the recommendation to the client base is what?
Well, the recommendation is always, and is more so at the minute, be on top of your currency risk. Because I think the one thing 2020 has taught everyone is you cannot predict what's coming next. I mean, you mentioned that breakfast we had earlier in the year. I don't think I mentioned the word coronavirus in it, and it's dominated the year. So stay on top of your risk and also just be nimble and able to react to the situation as it changes, because things can turn on a sixpence as we've seen throughout the year.
What's the thing keeping you up at night at the moment?
A second wave. And what that does in terms of the economy going forward, because you're going to have, especially in the UK, those three things coming together. The second wave, the tightening of fiscal policy as furlough expires and things like that, and what's going on with Brexit. So the UK economy is not in a good way at the moment and is unlikely to be until those three things are sorted out.
Do you have a preference how the US election pans out?
Personally, and again, I'm against consensus here, I think Trump wins. But I think too much attention is being paid to the presidency, because what we should be paying more attention to is the Senate. Because if you don't hold the Senate, you can't do anything as president. So we could have a situation where you have a Biden presidency, but the Republicans hold the Senate for another 2 years, and actually the political landscape won't change much. You're still going to have pretty much deadlock as you do now. So I think whoever wins the presidency needs to win the Senate as well in order to get their agenda through. But I think Trump will win. I think the fact that the economy is turning is moving in his favour. The fact that the number of COVID cases is coming down is obviously moving in his favour as well. And I think the other thing that has been perhaps underplayed a little bit is how elections now, digital strategy is so important. What you do online is so important. But we saw that in 2019 here in the UK, the Tories had a much better digital campaign, and that helped them out. And I think the same thing is happening in the US. The Republicans have a much, much better digital advertising campaign. I think that will help swing it as well.
And in the UK, this is in the news right now, isn't it? How are we going to tax big tech?
Yeah.
And of course, it's a hard line to try and work out where to take that. Certainly from our perspective, it's great to have the world's dominating tech firms want to have a presence here. How are you seeing that?
Well, it's a difficult one because it seems to be a bit of a political football that everyone wants to pass around, but no one wants to actually tackle. As you say, I think it's sort of incompatible with the government's aim of sort of levelling up and wanting these big tech giants to then say, we're also going to slap you and levy you with massive taxes. I guess the other problem that you've got is the fact that you're open to retaliatory actions as well. We've already seen in Europe where they're talking about a digital tax. The US are really throwing their toys out of the pram as a result of that. So I think it's something that it's going to be one of these issues that is talked about a lot and takes up a lot of column inches, but nothing will get done.
Mike, is there a specific reason why gold is a good investment during economic downturns?
So gold is a good source of value in terms of keeping its purchasing power. It is also a very, very good inflation hedge because it keeps its purchasing power over time. So it's an interesting question, because what we saw in March was people actually selling gold because they just wanted cash, to hoard under the mattress effectively, because it was so uncertain. But now things are ever so slightly less uncertain. Gold is glistening again. And the other point with gold is because real yields, so yields adjusted for inflation, have come so much lower, they're in negative territory. You're essentially losing money if you hold bonds to maturity these days. That is also another reason why people are going into gold.
Fascinating to go through all those responses, Mike. It just leads me nicely onto the next phase of the podcast, where I want to go into your background and your career. It's the initial question: where did you form this passion for the economy?
It's, to be honest, and this sounds a bit cheesy and cliche, but it is kind of something that I've always been surrounded by. So in terms of foreign exchange, my father works in the industry. My grandfather used to work in the industry. So it's always something that's been kind of talked about, and one of those things that you become as a young lad. You spend a lot of time with your father and your grandfather. It's something that you pick up an interest in. And I've always been, since I became slightly older, very keen on explaining the economy to people in relatively simple ways, because the economy, and when you hear about it in the press, it's always something that sounds very, very big and complicated and scary. But actually, when you boil it down, it's not. And I think I'm, very keen to take my interest and my passion, which I've had from quite a young age, and almost instill that in other people and get them to understand that it is important you understand the economy, because what's going on has an impact on pretty much everything in your life. And also, it's not this big, scary beast. When you get it simplified, it's actually quite simple for people to comprehend.
It's an incredibly useful skill to be able to manage people as well, of course. So I wonder how you manage having this knowledge base that needs to be live and current at all points.
Yeah.
And by that, I mean, what content are you consuming? How are you constantly re-educating yourself? What is the process?
Well, a lot of it comes through experience. So by doing it for so long, you know what to look for. But a lot of reading. So a lot of reading of data releases, of financial press, of the latest news, and through, years and years of looking at things, and there's people with many, many more years of experience in the industry than I, you get an eye for what you're looking for. And all of that slowly builds up into a bigger picture in your mind of what's going to happen in terms of a longer term trend. So the way I sort of start to think about things is look very, very broadly at first. What is going on in an economy? You look at the UK, Brexit, COVID, the US, we've got an election coming up. Europe, what's going on there? Well, they've recently agreed a big recovery fund, a big fiscal package. And then you dig into it a little bit more. And as the days progress, news comes in, and that helps to feed your view and then change your view as well. In terms of how you do it, it's quite boring. You spend a lot of time sat in front of a laptop or in front of screens looking at numbers moving around and trying to work out what they all mean.
And when you were forming the view early on in your career, which was, of course, I'm super interested in the economy, I'm going to go into finance, and then you decided to focus on Forex. Yeah. This was something you didn't even need to think about because of your father, grandfather.
Exactly that. It was almost a natural kind of progression. I'm interested in the economy. This is a sector that I know quite a lot about already before even going into it. It was almost a kind of natural path.
And Mike, you made the decision not to go to university. which is quite unique for someone who's then ended up in your front of office role.
It is, yeah.
How did you determine that was a good strategic move?
So I had got to, I reckon it was kind of just before the real sort of revision kind of exam season heats up. And I was just got to the point where I was absolutely fed up of learning stuff and not using it and not being able to use it, not being able to apply it. And it, kind of made up my mind to go, actually, there are other. I had offers to go to university. I had accepted offers to go to Cardiff. It was on track for all the grades. Got the grades in the end and everything like that. But it was just at the point where I was going, I want to go and use this. I want to go and do something. I don't want to spend another 3 or 4 years with my head in a book in this mindset of going, when can I actually go and apply this stuff? So that really made up my mind. It was a case of, I want to go and see what it's like in the real world.
Fair play. How confident of you to do that? In terms of then the period of time since you decided to do that, you joined Caxton, you're 4 or so plus years on. Yeah. I think you said come October this year.
No, August. So I've just done 4 years.
Just 3 or 4 years. Congratulations.
Thank you very much.
What would you attribute the characteristics that you have to this meteoric rise that you've had in that?
Meteoric. You've been very kind there. I guess, I would say I hate talking about myself. I would say I'm quite hardworking. I will always, stay until the job is finished and make sure it's done to the absolute best of my ability. I'm also, very keen to put in as much effort as I possibly can in what I'm doing. So I think that shows through in the end product. I think, if you're writing a piece of commentary and it's a bit half-baked, that the analyst isn't really interested in it. And I think, at Caxton, they've recognised that and put me in the position that I'm in. But I think more people should be confident enough to take that step and not go to uni, because it's not the be-all and the end-all of life and of your career. And I think actually the finance industry needs to open our eyes to that a bit and stop saying, you must have X, Y, Z degree, and going, actually, there's a lot of people out there who are talented and intelligent and keen who don't have that.
When you look at the next phase of your career, of course, on Searching for Mana, we speak to a lot of people who are in innovative businesses, fintechs. Yeah. Will you look to move into one of those type of businesses?
Well, I think fintech is the future because, technology is the biggest part of our lives at the moment, and it is only going to get even bigger, and COVID has accelerated that. And finance is always going to be there because it has to be there. We have to control our finances and our money somehow. So I think the merger of the two is inevitable. You're even seeing the banks start to do it now, and that's the big sign that they know it's here to stay. So I think at some point that is the way to go. What
do you imagine you'd have to adapt to then take that career path?
Well, I think it's a different environment because at the moment it's, the financial world is quite old school. A lot of things are done, in person, pen and paper, over the phone, very, very sort of old systems. So I think actually the biggest step for me would be putting faith in IT and in a bit of software, AI and things like machine learning and things like that to actually help with the job rather than see it as something that is doing the job for you and taking it away.
Real time, how could it help? How could AI, looking at a trading floor, considering IT's involvement in it, in a more traditional firm, be a challenger?
Yeah.
What would it actually improve?
Well, one of the biggest things, and you're already seeing it in certain aspects, is, AI can pick up on a trend before you can. AI can watch more charts and watch more data points than you can, and it will free up your time to focus on other things. So, for example, if we apply it to the foreign exchange market, the computer, for want of a better word, could identify a trend while you're working on something else. So you don't need to sit there staring at it all day. It can pop up a little alert and say, X, Y, Z has happened. Oh, that's interesting. Let me have a look. Rather than, spending all day with one eye on a terminal and things like news and things like that. But I think there's also stuff it can't replace. So, the human touch when writing commentary on what's going on in the market. I saw, I think it was last week, I think The Guardian put out an article written by a robot, and it was a very good article as it happens. But I don't think that's going to be, taking over the world in terms of market commentary. There are certain things, presentations, seminars that do need a human there. But I think there's obviously ways that your life can be made easier as well.
I think it depends who's making the decisions of what's needed. If it's a binary technologist, then they might not find the nuances what a human adds.
And that's the key point, it's nuance. And that's what the major difference is. You know, a human can tell what's important and what's not. A human can add slightly, embellish the language around things, whereas a computer is very much yes or no. And I guess that will change as time moves on and technology develops. But at the moment, that's kind of a limitation of it.
And now we've been looking further out into your career. Do you consider perhaps a job in the government? I mean, it sounds like you've got a lot of opinions on how the Treasury should be run. Is that something you...
I think further on, I'm always very keen to say, people should give back, if you like, to the country or in public service in some way. So I think, in a number of years, probably a number of decades, it is something that I would potentially look at, because I think, using your knowledge to help people more broadly is a brilliant thing to do.
So we've covered the markets. We've now timelined your career and the ambitious plans that I've just imposed on you. If we combine those and we think about the financial sector and then we think about careers, COVID and Brexit has put restrictions of movement into place. How do you see this playing out in terms of real time in the banks in London and the access to talent that they have?
Well, I think, and you've obviously got much more comment on this than I have, I think hiring people is a bit of an impossibility at the moment. And I think people will realise that as we go through into the beginning of next year as well, because it's all well and good working remotely when you work with people you know and you've got those relationships. But how do you form those relationships with someone you've recently brought into a business? How do you hire them in the first place if you've never met them? So I think it really is making things difficult for businesses that do want to bring talent in. And I also think it's making, finding opportunities, because how much networking in the city goes on over lunch or in a pub of an evening on a Thursday night when you're out having a drink with colleagues and you bump into someone who knows someone who knows someone. That sort of stuff cannot happen at the moment. And I think that is making it much more difficult for businesses to find people if they're looking, and also for people to find opportunities and open doors for themselves.
You have this compromise between what could be perceived as productivity because people are strapped to a desk remotely, and then a serendipity that is lacking now because of these nuances and these interchanges that people have over the water cooler. So it is interesting to see how it pans out, and that's actually what I'd like to ask you as the last big, broad, open question. I'd love to hear, and I'm sure the audience would, your views on what you think is going to happen in 2021.
Blimey. Well, the broad thing that I was saying, I've been saying this for a while now, and you're already starting to see it, is I don't think the new normal is going to look very different from the old normal. I think the new normal, which everyone talks about when coronavirus is over, will be a little bit more flexible working. People might be in the office 3 or 4 days a week rather than 5. But, people are going to go to the pub, people are going to go to restaurants, people are going to be desperate to travel again when this thing is over and when they can. So I think the new normal 2021 is going to look very similar in terms of our lives to how we were before all this madness hit, back in 2019. I think in terms of the economy, everything depends on, firstly, whether or not there is a vaccine or a treatment for COVID. Most people are saying there will be a vaccine early in 2021, which would, of course, mean all of these restrictions can be relaxed and the economy can start expanding again. But I think also we've got to think about what happens if there isn't a vaccine. And if there isn't one, governments have an unpalatable and awful choice to make, because at some point you have to go, this is a risk we now have to accept and we have to live with. And I don't know whether that would come in 2021 or in 2022. But really, the economy and getting our lives back to normality depends on getting a vaccine.
And from a foreign exchange perspective, the stance, I'm assuming, would be go to the safe havens, therefore.
Exactly that. Yeah, I think all the while there is this uncertainty on the outlook, which is going to persist for at least another 6 months. You want to be buying the safe havens, the dollar, the yen, and the Swissy. you don't want to be touching anything else really. And then when that abates, I think you're going to see actually quite a synchronized global recovery. And at that point, the dollar will begin to come lower. But again, it's going to be interesting to see how quickly the economy recovers, because initially we were thinking this is going to be a very quick rebound, before lockdowns came in. Now it looks like it could be, I think the Bank of England is saying the end of 2022 before we get back to where we were in 2019. So it's going to be a very, very slow road back.
I've just thought I didn't ask you about Bitcoin. Are you a fan of Bitcoin, Mike?
Personally, I'm not, but I am a fan of the technology that underpins it, the blockchain. I think that is going to be, and I know we've done a bit of work on it at Caxton, I think that is going to be very useful going forwards.
So I'm not rolling into Bitcoin right now.
I wouldn't be.
But I'm trying to find blockchain investments.
I would be indeed.
But even before that, I'm going to go and buy some gold.
The dollar, gold. Then you look at your blockchain.
Michael Brown, thank you so much for coming on the show. Absolute pleasure.
Thank you for having me, Lloyd.